well. Let's start with the first query for today. Kunal, let me just introduce our guests before we start that. We have Kunal as well as Avinash, who's joining in with us as well. So, surely, Kunal, I'm going to start with you first. And we have a short-term query coming in on Jubilant Ingravia. What is your short-term view for the stock? Should someone be entering the stock at these levels? We have a query from Daljit Singh Arora.
Well, I would suggest to avoid, the stock in the last, I think, 8-9 months has lost its mojo. It's retraced more than 60% of the previous price rally, and typically when a stock retraces, falls below the 61.8% retracement mark, is where we believe that the momentum gets lost for the kind of stock prices. So I would suggest that you can avoid the stock and go back to traditional large cap names. I think whether you look at the banking stocks, auto, pharma names, I think there are a lot of opportunities on the large cap front even at current levels. So I would suggest to concentrate there.
Right. Let's take our next query as well. That's coming in from Mr. Chopra. He says, hello team ET now. Chambal Fertilizer futures at 474 and DV's Lab futures 3635. What is the view? Avinash, you can take it. Both are well covered stocks. Chambal sector leader, DV's sector leader. What is your view on these two names?
I think Pankaj, since the viewer has asked a query on the technical side, I'll give a fundamental perspective. Chambal Fertilizers, I think he should hold on. My sense is that you could expect a very strong quarter 4, and I think fertilizers is one sector where I believe a lot of outperformance could get expected. So I think if we can definitely hold on for a slightly longer term period, another 15-20% upside from the current level looks possible. As far as DV's Labs is concerned, I think it's one of those players which is now going to show very strong growth in FY23. They are a large CRAMS player, a very strong order book, virtually a debt-free balance sheet. And I think here also, if the investor is willing enough to take a slightly medium-term call, I would not be surprised that the stock could get further re-rated. So both the companies he has chosen properly. I think he needs to give a little more time to see a reasonably more upside, coming out.
I'm going to come to you. We have a query coming in on the IT sector, and we have K.R. Balana, who's holding HCL Tech as well as Mindtree, both these stocks making a profit of around 10%, asking whether they should continue to hold these stocks for a long term, or should they be looking at another sector like the banking sector?
Yeah, is this question for me?
Yes, it's for you, Avinash.
I think as far as IT is concerned, as I mentioned earlier in my comment, that IT is one sector which cannot be avoided because it's a sector which earns dollars. It does not import any raw material, and I think considering the fact that the dollar is rising and the rupee is appreciating, I think there are tailwinds which clearly suggest that margins could get improved because of the currency factor. Both the companies which the investor has purchased, that is HCL Tech and Mindtree, I think should be held on. HCL Tech has given a very strong commentary, a very strong margin guidance. So I would believe that it's at a threshold where some good amount of breakout could happen in the next 3 to 6 months. Clearly, a price about 1200 to 1250 looks possible. So I think one needs to exercise a little bit of patience here. Mindtree has corrected because there were some reports that possibly there could be a merger between Mindtree and L&T Infotech, which was denied by the company management. But here also, I think the numbers have been very strong. The order book is very encouraging, and I think one needs to put in at least 6 to 8 months here. So if the investor can give 6 to 8 months, I would not be surprised that IT would be back in action, and I think a reasonable bounce and a risk reward could come in from here.
Right, another query is coming in on IT, and I'll give it to Kunal. Yogesh is asking, I'm holding 40 shares of Wipro at an average price of 553. Kunal, should I average the stock now? Wait for some time.
I would suggest to wait for some time. I believe that the stock has not gone into a bottoming out kind of a correction for itself. Plus, I think the results reaction, post-results reaction is what could probably keep the stock, into a bit more, I would say, doubtful kind of a scenario from a very short-term view. The stock has, I believe also could get into more of a time-wise correction, not just about a price-wise correction. So I would suggest that maybe over the next couple of months, Wipro comes back, say, towards 550 levels, I think, or above that. That could be a good level where you can look to re-enter.
Kunal, I'm just going to come to you again. We have a short-term query coming in for Hindalco from Vijayan, and he's saying that he's holding 80 Hindalco shares at 531 rupees per share. Can they wait for two more months, given they're seeing some price fall, or what should they be doing currently with the stock?
So Hindalco was one of the strongest metal stock, till I think the last month and a half out back. Surprisingly, metals they tend to have a high positive correlation with the dollar index. with dollar index perched at fresh highs, typically metal stocks they tend to outperform. But my sense is that with the gradual fall in across the major of the commodity asset classes is where you've seen many of these metal stocks like Hindalco as well getting into a correction. But I think this should balance out. The stock has already corrected from 630, 640 to sub 500 levels where it's currently trading. So it's almost like a 20% down from its previous highs. Those are good levels where I believe a stock typically tends to bottom out or at least find some demand. I would suggest that if you've bought at higher levels, good time to average.
Right. The next is coming in specifically for Avinash. It's written for Avinash. I am Mr. Subramaniam from Chennai. I have bought Everest Canto, also known as EKC, 100 shares at 150. Need a fundamental view over the next 1 to 2 years. Should I hold? Book profit? Thank you.
I think Pankaj, the investor can hold on, considering the fact that Everest Canto reported a very strong earnings numbers for December quarter, and I think looking at the kind of order book, and they are large players in the CNG cylinder space. My sense is that despite the fact that CNG prices have gone up, consumption for CNG in the automotive space is gradually increasing, and most importantly, I would believe that in the near term there are not many players who compete in the CNG cylinder space. There are few like Time Technoplast, but considering Everest Canto's capacity, geographical reach, I would believe that the next 1 to 2 years are going to be extremely strong. The company is also looking at expanding its capacity. It also has a overseas facility. So I think all in all, I think one needs to exercise a little bit of patience. But yes, one could definitely expect a decent risk reward if one were to keep the stock for the next 12 to 18 months.
Kunal, the next one is from you. For you, we have Murali from Kerala who's asking about GMDC. They are holding 225 shares of the company at an average price of 221 rupees per share. Should they continue to hold for the next 3 months perspective? What should be the view? Hold, sell, buy? What should they be?
So I would definitely recommend a hold. It's just that I think we are getting to a phase where many of these stocks are now getting into sell post results. So sell on news kind of a scenario. I think in that sense, GMDC is also witnessing some marginal correction from its highs of 225 to 40, I think 2 or 3 weeks back. So I believe if the stock comes back to a 20% fall from its previous highs, that should be around 178, 180 levels, is a good level where you can look to average and bring your cost price lower and then hold on.
Okay. The next one is for you, Avinash. We have a query coming in from Vinay. He's bought 1,000 shares of Genius Powers at 109 rupees per share. Time frame 2 to 3 years. What should the target be? What should they expect going forward here?
I think Genius Power is a very leading player in electric, smart meters, and I think the stock has been doing pretty well on the bosses, considering the fact that the management is quite confident that the state electricity boards are now converting most of the analog meters to the digital smart meters. So the order book continues to be strong, and I think this is one space where the government is making a conscious effort to ensure that there are very little power leakages because of this dynamic product. So I would believe that if the investor can keep a 12 to 15-month horizon, my sense is I think from an earnings perspective and an order book perspective, he could expect at least a 20% upside here. So I think keep on holding it, and obviously if the stock corrects, you can accumulate further.
All right, let's go to the next query then. It is coming in from Sriram. Given Biocon results announced last week, do we hold on to the stock? Kunal, any technical view?
So I think Biocon is a stock which has remained into a trading range. Now when we discuss pharma stocks, the pharma index moves completely different, rather Biocon moves completely different than the entire pharma index. It's not a very highly correlated stock with respect to the pharma index. But when I look at the charts, the stock has been hovering at this 350, 400, 405 band for I think the last 3-4 months. Very choppy moves within this 50-70 point band for Biocon. But I think if you can try and maybe absorb the volatility for the next maybe couple of months, there could be a possibility that the stock can break past above 400 levels. So I think momentum would kick off for Biocon only if the stock crosses above 400 mark. Till that time, I think you can hold on.
Avinash, the next query we have is for Hindustan Aeronautics HAL. That is, they're holding stock of the company at around 1,685 rupees. Should they hold or sell the stock as of now given the current scenario? This query is coming in from Srinivasan.
I think the investors seem to have purchased the stock slightly at higher odd levels, but I think if you look at the company fundamentals, I think they are sitting on an order book of almost 50 to 60,000 crores. the numbers have been very, very strong. And I think looking at the kind of defense initiatives taken by the government, I would not be surprised that the next 12 to 15 months is going to be a time when all the defense companies would do well. And HL is a monopoly player in the aircraft space, especially for helicopters, for fighter jets. So I think, the investor should patiently hold on. If required, one could average a little more quantity at lower levels, but I think definitely over the next 12, 18 months, one could expect a decent outperformance.
Right. So, let's just move on. And one more fundamental query we have, Avinash. So, I'm going to come to you again. We have a query coming in for IEX. Now, currently, Avinash is holding 4,000 shares of the company. Average buying price is 136 rupees per share. What is the long-term view coming in for a period of 2 to 3 years?
The IEX has gone X bonus, so I think the investor seems to have made a decent amount of money here. But still, I would believe the next 2 years are going to be very strong for IEX. First of all, in the power trading space, there are not many competitors. IEX is virtually a monopolistic kind of player, enjoying a market share of 98%. And despite the fact that one or two companies are going to come in, they might take a couple of years to settle down. What is interesting is the gas business has now started getting scaled up, and the gas business will also now contribute to IEX numbers. The Q4 numbers have also been quite decent. So my sense is continue to hold on. I think this is a kind of a very strong wealth creation story which could pan out for the next couple of years. If you don't require money, I think there's no point in selling out. I think the risk reward from here on also looks pretty attractive.
Right. Kunal, I'm just going to come to you. We have a query coming in on Angel One. Puneet has bought Angel One at around 1,966 levels. What should be the expected target price coming in for this stock in the near term, if you could see?
So it's a slightly higher end of the buy price. I think if I'm not wrong, the stock is trading at 1975 or 80 levels currently, and I think after 2-3 days of sideways price action, today is the day where the stock has managed to see some good momentum as well as breakout. But the price trajectory, the divergence from the 200 DMAs, 50 DMAs are not making the trades, a much better risk-reward play. So I would suggest that look to play more, short-term oriented when you are trying to buy these kind of stocks on high momentum. And it's much better that you wait for corrections of at least 5%. So maybe 100 rupee, 120 rupee correction from current levels could be a good zone where you can look to enter, and then hold on for a target of almost 5 to 7% on the upside.
Okay. Kunal, we have a query coming in on the short-term view for Chennai Petro. What should one be doing with Chennai Petro given the current scenario? Is it still a good time to hold the stock as it's gone up already?
So I think it's a good time to hold on, but then depending on the buy price of the viewer, I believe it's also a much better strategy to try and lock your profits, or at least look to trail your stop losses significantly. Because when you see such kind of a steep rise in stock prices, where in a matter of just about a month or the stock gets into 100% plus kind of a returns, those are slight exaggerated moves, and that calls in for some reversals, at least on the short term. So it's much better to protect the profits. Trail your stop losses would be our advice.
Right. Just stay on with us, gentlemen. In terms of numbers, it's the result season that's going on, and one big company that declared numbers was Vedanta. Let's go across to the management now. Sunil Duggal, Group CEO at Vedanta, is now with us. So firstly, thank you for taking out time for us. This quarter has been strong, led by performance in higher commodity prices. But in your opinion, how long will elevated prices sustain? What is your outlook, internal outlook for commodity? Okay, I think there is some issue with that, particular link. So we'll just go across to him in just a bit from now. 93 points higher for the Nifty, 0.5% higher. Mid cap index is up 0.4, 0.5. Small cap is starting to make an up move. However, it's the HDFC group stocks that are actually leading the way. So we can just pull up HDFC Life. We can pull up HDFC Bank for you, as well as we can pull up HDFC Limited. They all seem to be doing well in the market. There you go. Sun Pharma is 3% higher. Dr. Reddy's is up 3%. Tata Consumer is up about 2%. You have a Kotak Bank, Bharti Airtel, Tata Steel, which are all looking on the higher side. Power Grid is down 1%. Axis Bank is down. Wipro, I think they declared numbers today, so that's down about 1 to 2% ahead of numbers. Most of the tech companies or IT companies have not done particularly well. In terms of other movers, GIC Reinsurance is up 7%. Shriram Transport, that's a results impact, it's up 7%. IFB Industries is up close to about 6.5%. Mahindra Holidays is up about 5 odd percent. Okay, Mr. Sunil is now with us. Sir, thank you so much for taking out time for us. If you can hear me, the quarter has been led by commodity prices. What is the outlook for elevated prices going ahead?
See, Vedanta deals in the product. Actually, nobody deals. We make aluminium of the size and scale. You know it. We are into the business of zinc, lead, silver, oil and gas, nickel. So we are in a unique business. As far as commodity is concerned, you may know that the commodity prices are where they are, not only because of the geopolitical reason or the energy crisis where some of the smelters were shut in Europe. But there was also a alumina refinery which was shut in Ukraine, and the 4 million ton aluminium capacity in Russia, they have the barrier to export. But the role of the metals we deal is much bigger than meet the current requirement. In the renewable space, the World Bank report has said the role of minerals in the renewable is much bigger. So it says that if the normal demand in few years from today is X, it is going to be 2X because of the roles of this metal in the renewables. The renewable capacity is going to grow up, but the storage capacity is going to grow up much faster and bigger, because the requirement of storage will be such that if we want to feed the power 24/7, the storage has to play a big part. So the commodities we deal, and in general, the commodity requirement is going to stay. And there are not very many projects in the pipeline as of now which can feed the requirement. So with this demand, the commodity prices are going to stay where they are today at least. And the role of recycling is also going to become bigger and bigger as we will progress to meet the total demand of this world.
Right, Mr. Duggal, this is Vinny joining in as well. You know, you right now just spoke about your outlook on commodity prices as well, growing demand as well. But are customers able to absorb the rising commodity prices?
No, actually, customers will be able to absorb. Definitely, they have been able to absorb till now. And with this, the overall growth of the renewables or the demand or urbanization or standard of living or per capita consumption, this is the new reality.
So what happens to the cost then? You know, when we talk about cost, they were on the higher side this quarter, but higher commodity prices overshadowed the cost of production. So if commodity prices cool off, do you expect input costs to also cool off in a similar fashion?
You see, if the commodity cycle is such that the commodities are at a elevated level, the headwinds, of course, are also there. But we are also very proud to say that we have been able to stay at the lowest quartile of the cost curve globally. If the cost has gone up, our cost has gone much lesser. Our productivity, our volume, our efficiency has been better. Our coal materialization has been better. And you must have also noticed that, in fact, the coal cost in our aluminum business has gone down. But we are changing a business model from now on. Like Hindustan Zinc, we are trying to make all our businesses more integrated. In aluminum business, we are raising the capacity of our alumina refinery from 2 million ton to 5 million ton. So the total alumina will be fed from our alumina refinery in Lanjigarh. Similarly, we are operationalizing our 3 coal mines, which we have won through the auction. One mine is getting operational next month. The other, the H2 of the current year, and third in Q1 of the next year. The cost of the average cost from these 3 mines will be less than 50% of the current cost. So the full potential of these 3 mines is to fully feed coal in our aluminum operation to the extent of 24-25 million tons. But we are also thinking to have one more mine through auction, so that we are in a very comfortable position. So overall, Similarly, in our steel business, we have won the Barville mine through auction, and we have started feeding iron ore to our operation. So the overall objective is to make our operations integrated and insulate us from any headwinds, if it may be, and keep the cost at a sustainable and predictable level.
Mr. Dugal, I wanted to talk about one thing, that's the net debt. Now, that has actually declined by around 6,600 crores when you look at it since 31st December 2021. And when I'm looking at your net debt to the EBITDA, the ratio currently is standing at around 0.5 times, which is the lowest that we've seen in 5 years. So how long will the debt reduction continue? What is the debt figure that you're aiming at now?
You see, our debt, as you rightly said, at limited level and parent level also, we have committed to the market that in the next 3 years, we will deleverage by $4 billion at least. But I'll give you some maths. We have had EBITDA of $6.25 billion last year. The last quarter EBITDA was $1.92 billion. And this run rate, we will have $8 billion EBITDA. The actions which are in pipeline to raise the production at Zinc International, Electro Steel, Aluminium, value-added business, Hindustan Zinc, oil and gas, and make the operation more integrated. So this will have the potential to bring the cost down. This will also have the potential to take our volume up by 15-20%. So the potential of the business at current commodity prices is $30 billion. And EBITDA of $12 to $13 billion. With a capex of $2 billion and other expenses, the cash flow could be $7 to $8 billion. So with this kind of cash flow, we have the potential to both deleverage the balance sheet at our PLC level and pay the debt at limited level.
Right. So, sir, that was all.
Okay, right, Mr. Dugal, thank you so much for joining in with us on ET Now, giving us your views on the earnings. With that, let's just slip into a very short break, but stay tuned in because we'll be back with more on the other side.
Ebix कैश हर खुशी के लिए काफी है।
SEL Tiger TMT rebar में ताकत बेमिसाल और इसका एडवांस्ड रिप टेक्नोलॉजी रखे सीमेंट से बॉन्ड सालों साल। इसे कहते हैं बॉन्ड, टाइगर बॉन्ड। इन दीवारों में टाइगर रहता है। SEL Tiger TMT rebar।
कल हम सब